And to talk about the economic challenge weighing on Mervyn King and his MPC peers, and weighing up all this today is Azad Zangana, European economist at Schroder Investment Management. Good morning.
Good morning.
Thank you very much for joining us. Which camp would you be if you were on the MPC?
Well, I would be in the rate hiking camp, but let me be clear, this has nothing to do with inflation where it's currently at. The current rate of inflation is very much being is elevated because of energy prices, food prices, and of course the increase in VAT, none of which can really be affected over the short term by a rise in interest rates. My concern is more around the amount of spare capacity within the economy, and in my view, and I share the view of Spencer Dale and Andrew Sentence, there is less spare capacity in the economy, and so we should expect higher domestically generated inflation in around 12 to 18 months' time.
So it's best to get the interest rate hike out there now. How many more and how soon?
First of all, our view is that we should see around 75 basis points this year, and more so in next year. But that's not our view of what will actually happen.
What's your view of what will actually happen?
Well, we do think that Mervyn King will continue to dominate the committee, and will correctly argue that the current rise in inflation will not be impacted by rise in interest rates. So we think perhaps the rates will begin to rise at around August time of this year.
Who do you think will go next? We've got three, as we know, who are voting for a rate hike. We've got a new member starting in 3 months or so. Who could be the next member, Azad, to possibly join those three who are voting for a hike?
I mean, it's very difficult to say. I mean, there's been a number of members that have sort of hinted at being uncomfortable with the current position. Perhaps Charlie Bean could be next. It could be Tucker or any of the other members, actually. But really, there's a lot of questions around the strength of the economy at this moment in time. The UK is going through a bit of a soft patch at this stage, as we see the PMIs rolling over, house prices still falling, net lending still very negative for both households and businesses in the UK.
Can the UK withstand a hike in interest rates?
Oh, I think it can, mainly because most of the impact will come through later on in the year. But the question is what's going to be the impact psychologically on the consumer? Consumer confidence is very weak at the moment, given the rise in VAT, the coming increases in petrol prices because of the duty increase, but also national insurance increases in April.
Got to get a question in on Spain, Azad. Big news today, of course. Moody's downgrading it by 1 notch to the 3rd highest rating. Came at an interesting time, didn't it, ahead of the Bank of Spain announcement on its cajas later. Did it take you by surprise at all? Because some were beginning to suggest that Spain was getting itself out of the woods.
Well, I don't think you should come as a surprise to anybody. Moody's just moved in line with S&P, and their assessment on the potential size of the banking bailout is absolutely correct. If anything, actually, our own banking analysts suggest that it could be as much as 100 billion euros required to bail out the banks. But, you know, it's not about the size of the bailouts for these banks. It's about the disclosure of the details of what they're holding and what needs to be written off, and get that process underway. And that's
Are you confident that you'll get what you want to hear, full disclosure from the banks?
Not in the short term. I think it will come eventually, and with a lot of pressure from the European Central Bank, which, of course, is trying to add pressure by potentially raising interest rates in the coming months.
Azad, thanks very much for joining us today. Azad Zangana there, European economist at Schroder Investment.